Hi, I'm Michael Newrock from TradersElite.com. Welcome to today's video. It's the market analysis for the week starting September 19. Thanks very much for all your feedback. It's been fantastic and really given us the motivation to continue doing these market analysis videos, which are not part of the service, but it's something that we want to now incorporate and include indefinitely. It's also given us the encouragement to finally start off webinars that we will be conducting and starting very soon, hopefully in the next week or two. So make sure you look out for those. They will be live. They will be recorded, but it's great to experience them live so we can take a look at the action that's happening right then and there and go on a pip hunt, if you like, see what opportunities we can find at that particular time. So watch out for that. Now, on these charts, just before I get into it, I have three indicators being displayed. First of all, trend catcher, which are the big arrows that you see here. They are the ones that identify changes in trend and allow us to catch trends or catch trades at the inception of the trend. We also have price slip, which is a price reversal system. You can see here the small arrows. So we get this one so happened to pick the top within the trend. We've got another one that picked this change in the correction here before it fell back down, as it did over here. We've got another nice one here. And we've got macro levels, which are these horizontal lines that give us or identify the key macro levels, the major levels of support and resistance. They're taken on daily, weekly, and monthly time frames, so they are rock solid. And if you have been using them, I'm sure you would have seen time and time again that price does react to these significant levels, and they're great to be used in corporation with any strategy that you use. But with the indicators that we use, it gives us a really good balance of trends, reversals, and support and resistance. Of course, you're not meant to take every signal that comes up, but as a premium member, you do get access to full access to all three indicators to use, including push notifications to your mobile device via your mobile MetaTrader account. So what we generally look for is a combination of these indicators. For example, a trend trade to the upside here, closing above the macro level here. And here we can see a trend trade to the downside, closing below the this macro level, which acted as resistance. Now you can do the same thing with price slip. So you're looking at combining price slip with the macro levels for support and resistance. Okay, so let's go straight into the charts. Here we are on the gold chart, XAU USD. We're on the 4-hour time frame, and let's just change over to the daily. Daily has recently changed to a downward trend trade, and on the weekly you can see that it is still in an upward move overall since well, late 2015, early 2016. But for now, of course, we're seeing that it's moved down. Now, we issued a signal around about here for the new trend trade, and it's gone extremely well. We've hit target 1, we've hit target 2. We haven't hit target 3, which is down around this level here. But what we need to see now is a break of this macro level, the 1307.64 macro level, for a continuation of the downward move. At this stage, it's looking as though it's found some support here. However, I wouldn't really be buying into it at this stage. For now, we're still short on gold. We have seen a small correction here, but it's nothing major. So if we get another push down, then we could see further move down towards, what are we looking at? 1284 would be the next stop on, or next target for this particular pair. Okay, so gold currently we're short. But for that to continue at this stage, we need to see a push down below 1307. Would I get into it now? Well, not necessarily. We've been in on this trade for some time. So to be more sure, if there's such a thing in trading, we want to see price break and close below 1307. At that point, if we see resistance on 1307, then it could be a possibility to go short even further. However, just be aware that you would want to keep your stops very, very tight, just above the 1307 macro level, and that the move has already extended quite some distance already. All right, Euro. Euro, last week I said that I expected the pair, if it broke the 112.70 macro level, to continue upward. Now, we saw it test the market and stop right on the 112.70 macro level. So when I say break that level, I also mean, of course, to close above that level. In this case, it did break above, but closed just below. We saw a rejection of the price at that level. Then we saw it break above the level again rejection, and then of course we've seen a major move downward late in the week. All right, so if we look at the daily time frame, we can see it's unclear at this stage. I mean, it is looking like it is going to go down, but it doesn't have a lot of momentum. So I'm not trusting this particular pair at the moment for continuing its downward move, and I wouldn't be looking at getting in on it at this stage. Now, of course, we can see a bit of a consolidation, a bit of a zigzag, and on the weekly, we can see that the fast moving average has just crossed over the slow moving average, but again, price is below that. So price is always the price action is always the leading indicator in itself. So at this stage, I am on the sidelines on this particular currency. If I were to go short on this, I'd like to see it, come back up to 1270 and looking for another trend trade or a macro levels trade or a price reversal trade. At this stage, it is looking at moving down to 110.98. So for now, we're looking at continuing to be short on this particular pair. If you did want to get in on the action, then I would be looking at a shorter time frame, say the 1 hour or the 15-minute is one of my favorites, but at this stage, it's flat as a tack, so it certainly doesn't give me any confidence in being able to short this pair. If I were to look at it, I'd be looking at a swing down before getting in on it. Otherwise, it really is purely a gamble, and I'd want to see the MACD change, or the histogram of the MACD change to a red bar. So that would give me more confidence that the trade would continue to go down. But at this stage, we're about 60 pips from that macro level, and you would really want to get in at about this level here after a swing. So yeah, there would be 50 pips in it, and I would say place to stop above the fast moving average, but it is a little dicey, and for ourselves, we're on the sidelines for it. But there is opportunity to go short still at this stage. It's just a matter of being aware that there are risks involved at this particular time. So wait for a swing, and with the possibility of going short to the 110.98 macro level, see how it reacts at this level. If it breaks and closes below that, then we're going to see a continuation and potentially an acceleration of the momentum of that fall to the downside. If it reacts off this and finds support, then we could be looking at another rally upward before any firm trend is formed. Okay, pound. Pound, again, I had spoken about early last week of it closing above the 133.23 macro level. On this trend trade here, we see that it was formed, but there was a rejection of the macro level closing below. So we saw an immediate flip to the downside, bit of a consolidation. Price flip caught a nice one over here, and we saw a real collapse of that pair. Now the move was too great for us to publish a signal. However, we did publish late last week. I think it was Thursday or Wednesday or Thursday, probably Thursday, shorts on the pound Aussie, the pound Kiwi, and the pound CAD, and they have all gone on to hit at least target one. Two of them have gone on to be halfway or closer, or even further to target two. I believe the pound Kiwi was within just a few pips of hitting target two, and during the session we may even see that eventuate. So for now, we're short on the pound and crosses of the pound. It's been taking a bit of a battering. Last week, the Bank of England held its interest rates on hold. However, we can see the Brexit event here, and since then it's just really been meandering. Now we see on the daily, we see a nice trend trade to the downside forming. So if I was looking at shorting this, then I think most traders would agree to wait until the price comes back to, if it does come back to the 31.20 macro level, and then short it down to 128. That's what we're looking at. And this was a newly formed macro level, if I recall, from the Brexit event, which denotes this low of that. So there's some good pips in it at this stage. We're looking at 220. If we were able to catch it from that macro level, then we're looking at closer to 300 pips. So on the daily, it's down. On the weekly, it's clearly down. And on the 4-hour, it's down. But on the 4-hour, we are looking at it being in a little bit of a oversold zone at the moment. And you can see beginning of the week, we've already seen a little bit of a move upward. So at this stage, when the UK market or the European market opens, then we could see a resumption of that downward trend. Alrighty, so let's move on to the euro pound. Euro pound, this is a bit bittersweet to me because we did publish a signal to go long on this early last week. I think it was a macro level trade. Now it did sit well in combination with being in the 4-hour trend trade, and it did move up. However, came crashing down. Now we only keep our stops at very small levels because the whole idea, obviously, in trading is to have maintain good risk reward ratios. In other words, you want to risk little and win big. So in the simplest terms, if you're betting $1, you want to do everything you can to make sure that your reward or your win is $3 or $4 or $5 or $10. So if you do that, regardless of the strategy you use, then it's a good policy for all traders to adhere to. Of course, different strategies lend themselves to different risk reward ratios. But anyway, back to the euro pound. We are seeing a move down after that correction. We did see it go back up above the macro level, correct again, and go up again, and it has since now popped up about 60 pips from this macro level, and I would expect it at this stage to continue on to the 86.36 macro level at least. If we go to the daily time frame here, we can see the new daily time frame on trend trade has formed. So if we see a break of 86.36, then it's onward and upward to 87.69. So if we go to the weekly, again, we can see it's been in a definite weekly upward trend since late 2015. Correction over here, of course, but overall the move has been very strongly up. So in the 4 hour here, um, how I'd play it now is possibly looking at a correction back closer towards the 8505 macro level and seeing if it can be picked up on a shorter time frame. Again, we look like we've got a correction in action right now on the 1 hour and on the 15 minutes. So definitely not a time to go long. Wait for this correction to wear itself out, and then we could get another move to the upside for the euro pound. Aussie. Okay, now last week I said that the Aussie was in free fall, pretty much from its high here of 77, it's just collapsed, formed a new trend trade, had a little bit of a break here at, a stop at the 75.33, crashed through, rallied back up for a correction of this fall, and then crashed again before we saw a price flip trade or signal. Actually, a second one here. Now, since then, we've had a trend trade to the upside, but it hasn't been very, very strong. It's also gone through a correction, but for the time being now, we're seeing an upward move. I am not confident in buying into the Aussie, and what I'm looking at very closely now, of course, is this 75.33 macro level. If it breaks through, then we could see another resumption of this upward move. But if it gives a reversal at this point, it could be an opportunity to short the Aussie again. So let's look at it on the high time frames. On the daily, it's clearly in a downward move with this little bit of a correction here. So what we're looking at is under pressure. The MACD is below this invisible horizontal line, or the zero line. So what we want to see is this MACD change to red on the daily, and that would give us a lot more confidence. And the rewards are big in this case. And let's look at it on the weekly. On the weekly, it's just been going sideways. It hasn't really been moving up. It hasn't really been moving down. But overall, back from 2014, of course, the move has been predominantly down. So what I would be looking at on the daily again is that rejection of the price at 75.33. Okay, that's the key point. And I'd look at either a macro level or a price flip trade to get in on shorting this pair. But it would have to be fairly significant to do so. Otherwise, this 4 hour trend may prevail. But how I'd play it right now is a rejection of the 75.33, so we're showing resistance there, and a short down to 73.85. Now, if it goes below 73.85, once again, just flipping back to the daily, we can see some real good potential here to go even further to 72.67 and even below. Okay, so a good possibility for a short sometime during the week. Kiwi, very similar to the Aussie. And, at the moment, it's had a rejection of this upward trend. It's back to a downward trend. Now, it depends what happens over the next, on my chart, it's 2.5 hours for this 4 hour bar to close. So at the moment, we're seeing an emerging downward trend, but we do need to see price come back down to around the 72.60, 72.70 to give us more confidence in shorting this pair. Otherwise, we could see a move back up similar to the Aussie to 73.69, and then if we see rejection, if we see resistance at this level, then a good opportunity for a short down to 71.76, which is the next macro level. So if we go to the daily, again, we can see, similar to the Aussie, a new downward trend trade, but not the strongest at the moment after this correction. Of course, this bar here is Sunday, so I wouldn't take too much credence into that. But we do want to see a downward move, back around this level here before going short. On the weekly, we are in a weekly upward trend. So it is a bit of a tricky one to play at the moment. But if we see the opportunity here, it could be a good short. And over here, say if it closed at around 72.65, there's 80, 90 pips into this trade to the next macro level, and the risk would be quite small because we really only need to put it around about here, so around 25, 30 pips, just above that crossover of the fast and slow moving average. Okay, Aussie Kiwi. A couple of hours ago, we issued a buy for this pair. It was around 103.05, I think it was, so just around here. So, we're only about 10, 15 pips up, and it's nice to see that it has cleared these recent highs. So I like this trade, not because I think of the possibility of the strength in the Aussie, but more that we are seeing a bit of correction in that currency, and we see a lot of room for move to the downside in the Kiwi, and therefore the potential for the Aussie Kiwi to be high, to go long or to go up is quite high. We've seen this pair reacting off this macro level here. We saw some nice price flips here, catch a nice little trade, scalp trade if you like, and over here, particularly these two, of course, we can see that it's clearly in the oversold territory. So if we look at the daily once again, we can see a swing in the daily, even though it's a downward move by the MACD. So it would take a move below the 102.85 macro level to go short again, because in my opinion, it is in that oversold area. On the weekly, you can see it is even more distinct. But again, we're seeing this price action here of support at that 102.85 level. So what do we have the stop at? Around 107.70, so around 30 pips for the stop. But there's plenty of opportunity here for a for some good profits. How about 180 pips, 185, 190 pips to this 104.92 macro level, which is why we published this signal. And of course, it was a valid trend trade with the fast moving average crossing over the slow moving average. So we're currently in this trade as a long. It's our first trade for the week. Okay, dollar CAD. This was a nice one. It's hit target 2 from last week's signal, and if you were in on this trade still from the week before, I think it would have hit target 3. Again, we saw a rejection at this 132.60. So it's just a case of the market, finding, the market, nothing ever moves in a straight line. So it's kind of like the tango, 2 steps forward, 1 step back. And in this case, we're seeing a 1 step back, correction. If this fast moving average crosses over the slow moving average, then we could see a new downward trend trade forming. But for now, we're still long on US dollar crosses and have been for some time, for the last couple of weeks at least anyway. On the daily, we can see a strong upward movement of the pair, and on the weekly, we can see that the price is above the fast moving average. The fast moving average is above the slow moving average. Now it's been flat, so it is a bit of a it is going through a bit of a consolidation period, but recently we have seen nice upward moves, which is why we've gone long on the dollar CAD 2 or 3 times at least in the last 2 or 3 weeks, and it's done extremely well for us. So I personally wouldn't be going short on this right now, and rather looking for an opportunity to go long after this correction has faded out. Okay, dollar Swiss similar here. We've got a move to the upside. This one was a little bit of a bugger. It gave us a trend trade to the upside here, but it was rejected at the 97.51 macro level. Another upward trend trade here above, but again rejection. And this is the third time that we've seen a trend trade to the upside. Nice price flips here, I should add. So let's take a look at the daily here. There's no crossover at this stage, but both moving averages are pointing in the upward direction and on, fairly good slopes. On the weekly, it's a little bit more uncertain. It has been going through that zigzag consolidation period. So it's a bit of a whiplash kind of pair at the moment. So for now, I would be waiting. If it does come back to 97.51 and reacts off that as support, then it could be the one to take to propel the pair going upward because there'd be a lot of traders that are going long on this pair at the moment. It's just that it's been going through this, whiplash motion. So possibly a swing on the 4 hour, or even looking at a swing on the 1 hour. Now, what I mean by a swing is, when we see the MACD coming down, fading down to this zero line, this invisible line that separates the upper and the lower histogram, and then we see a nice move upward, you'll see the histogram changing back to green, and that could be a good opportunity to go long. Now, it's only best to take these swings when the histogram is close, really close to the zero line. Okay, here's a nice example over here. We saw a move down, and then we saw a swing up. Of course, this was way too big a swing that I would normally take, but it certainly did well as a scalp. But that's what I'd be looking for right now, a swing to the upside, or on the 15-minute, more of a fading down and then a trend trade to the upside. Okay, so back on the 4 hour, we're long on this, but it's just a matter of finding an opportunity to go long on it. But certainly, I wouldn't be interested in looking at any short trades at the moment on the dollar Swiss. Dollar yen, we've been overall bullish on yen crosses, and they have given us some good results, but other times they've been a little bit problematic. But similar to the dollar Swiss, we're seeing one, two. If we see a third one here, it could be a really good opportunity. So we saw trend trade here, rejection, trend trade here, rejection. But we still are, and this is a key point, we're still seeing support here at this 101.65 macro level. So on the daily, it has gone sideways. It's given us a trend trade to the downside before, but the price has just moved sideways, and it hasn't busted through. It really did need to bust through this 101.65 to go any further short. And of course, the BOJ, the Bank of Japan, are desperate to dampen the value of the yen. In other words, they want to see the yen lower, and for the yen to go lower, that would mean that the dollar would be going higher against the yen. Now, last year we saw a fantastic rally on the dollar yen, but since January, or late January this year, we've seen a fall really back down to this 101.65 level. So you can see here, just looking back historically, you can see that this 101.65 has played a real role in support at this point, but also previously as well. Again, the macro levels are based on particularly weekly and monthly, some daily, but particularly weekly and monthly time frames. So, we're talking about years of historical data to be able to determine what these levels are. Okay, so on the 4 hour, I would be looking at a crossover, the fast moving average to crossover the slow moving average. It's above the macro level. It's had two attempts before, and it's kind of a case of the 1, 2, 3 heave ho mindset. So if we see a third push upward, it could be the one that moves us and sees a rally of the dollar yen. We'll certainly be looking out for that. And publish a signal accordingly if that eventuates. Or if it comes down to the 101.65 and we see a nice price flip to the upside as we saw over here, then we could see again a movement up towards 105.41. And let's say, just hypothetically, if it came in around here. We see a nice moving average crossover around here. There's some great pips in it. So we're looking at around 275 pips and a stop of around 40, 50 pips, thereabouts. So there's a really good risk reward ratio. It's 4 or 5 to 1. In other words, your reward is 4 or 5 times bigger than the risk for that trade. Euro yen, a little bit undetermined at this stage, and of course because the euro is in a bit of free fall, so this one I would be leaving alone. On the daily, again, we're looking similar to the dollar yen. If we see some action from the Bank of Japan, now we're technical traders, but of course we are aware of the fundamentals in the market. So it's a combination of that, and I think the market is really waiting, for some action from the Bank of Japan before we see a movement to the upside. Again, we're seeing, quite a significant move on the weekly charts since April 2015, so about a year and a half. And on the daily, it's not very confident, is it? It's not a strong one, and we would need to see a fall and a close below 113.61. So, in my opinion, we're looking at the opportunity to go long if we find support here. Right here, we found support here, price flip was given, support here at the same level, price flip was given, and again here now. However, I don't think this downward move is necessarily over at this stage, so I would be sitting on the sidelines for this particular pair. Okay, Aussie Yen. Aussie Yen, we are seeing, as we saw before, a bit of a move to the upside for the Aussie, which I'm quite happy about right now because we're short on the pound Aussie. So even if the pound stays stable, and we'll take a look at this in a moment, if the Aussie is going up, that's going to drive the pound Aussie down. So we could see, if we see it moving average crossover, it could be a signal that we're brave enough to issue. It is above the 76.19 macro level. We have seen a recent price slip on the 4-hour. I wouldn't be counting this one because, of course, that was Sunday. So it's difficult to really associate it with the consecutive candle pattern that price slip strategy utilizes. Now, of course, you get all of the strategy guides and the indicators as a premium member. So if any of this is a little over your head, then of course, the manuals go into it in a lot more detail. And once again, I'm looking forward to doing these webinars where I can do some Q&A with you guys to help you, on your journey as a trader. Okay, Pound Aussie. Pound Aussie, again, not one I would be going long on. It really is in a bit of a decline, and we could see a resumption from the consolidation period after Brexit. It's been a few weeks since that event. The country is still in a bit of disarray, not knowing, what to do. Europe isn't unsure what to do. Of course, the separation between the parties is not going to be official before the official divorce papers, if you like, are submitted, and that's not considered to be anytime soon, because a lot of things need to be happening, and before that's arranged. However, what this means is uncertainty, and the market hates uncertainty. And when there's uncertainty, you generally see falls in a currency. So pound yen is something that I wouldn't be looking at to the long side. It could be a possibility to go short on this, particularly if we see a testing of this 133.48 macro level. But I'm not crazy about doing that because the yen, the Bank of Japan, as I mentioned before, is crazy about devaluing their own currency. So it's a bit of a dicey one. But for now, certainly, if the stops were small and you were locking in profits as you go, because anything can happen, the market can change on a dime. Next stop, or next bus stop, if you like, next target would be 128.80. That's what I would be looking at, and we can see that it was almost reached previously back in mid-August. So of course, profit lock as you go, but there's plenty of pips here. We're talking about over 400 pips. And the risk at this moment is, very, very small. So the more I look at it, the more I'm tempted. About 60 pips for a stop and 400 pips for a target is fantastic. Of course, that wouldn't be my first target. That would be target two. With macro levels, I like to have a target placed midway between the macro levels, and then a target in this case just prior to the macro level. But it'd be one that I would really want to watch closely. Um, okay, Kiwi yen. That again, the yen crosses are all a little tricky to pick at this moment. So um, yes, I'd be looking at going long, but the Kiwi has been experiencing some falls, and it's fairly typical for the Aussie and the Kiwi to experience small rallies at the beginning of the week. So I'm not convinced with this currency at this particular time, so it'd probably be on the sidelines. Swiss yen. Swiss yen again, one that didn't go fantastic. Actually, it was a bit of a bit of an annoying one because we published a signal for it and it went beautifully 50, 60, 70 pips up straight away. And it was so quick that we didn't update the trade because we thought, well, another 20, 30 pips to the first target, but then it crashed. And you can see, I'm not sure where it was at this stage, but it was I've one of these rallies and it's crashed since. So at this moment, um, too much uncertainty for for me personally to get in on this trade, and I would be looking at this stage. We've passed the inception of the trade. It's gone nicely for this downward move, about 75 pips currently, about 60 pips, but I would be looking at the possibility of it coming back up to this macro level, and I'm not really interested in this particular pair at this particular time. CAD yen, it's been certainly going down quite a bit. And let's take a look at the daily. I'm not really interested in this going short because it is already in this oversold area. And then on the weekly, we're already, again, we've seen support at the 76, 78 macro level. And you can see these macro levels were published, back in April. Now they are modified every couple of months, some of them, but some of them are left alone for 6 months or more. So you can see that this pair has been reacting, quite strongly off this macro level. So at this stage, I would be letting this downward fall to continue and possibly looking at a macro level trade or a price hook trade or combination of both at this point. If it breaks through 76, 78, I would leave it alone because it's clearly an oversold in my opinion. Wait for it to come back and it might form into a new 4-hour trend trade like this one here. So we might see it overshoot 76, 78 and then come back up. Nice little crossover around here, and then we've got some good opportunities for going long on that pair. Okay, Euro Aussie. Now we don't publish every signal that we see because there's just too many of them, and quite frankly, we would probably get traders, our members, into issues from over trading. But much like the pound Aussie, this is in a heavy decline. So if we look at the daily, we've seen a strong swing down and the rejection at that 150.31 macro level. Here again, you can see, to the pip that it reacted off this level. And, unless we get a swing upward, I would say that this pair is going to continue to go down. On the weekly here, once again, it is under pressure. And the reason I say that is because the MACD is below this macro level. Now, this parabolic curve that you're seeing, this visible curve that the MACD histogram is forming, is a beautiful sign that if we see a swing down and this histogram turning red, or the next one turning red, we could see some nice moves down, and I'm talking about potentially hundreds of pips. So, if we go back to the daily, by then we'll also see, of course, on the weekly, there's only one of these bars per week. And it'll be a couple of days before we see a downward new trend trade forming, and by that time, I would dare say that price would be below this 147.05 macro level, unless it reacts off it, in which case all bets are off and it may be going back up again. But for now, on the 4-hour trend trade, of course, you can trade on shorter time frames, but the 4-hour is my preferred time frame to use, and of course. For our members, it's the best one that suits our members because we live in a 24-hour world, and not everyone catches the trade at that particular time or within the hour. Some may be several hours after the signal has been issued. But for now, Euro Aussie is going down. We're seeing some nice movement on the MACD, and for the way that I see it, I'm looking at the pair coming down to this 147.05 macro level. For me, it would be too late to get in on it now. I'd like to see some kind of correction and then a swing back down and catch the swing, because right now you could say, well, it's going to continue to go down, but it may not. It may retrace on itself. It's interesting. It's just broken past this little correction that we had here, which is going to either act as support or resistance for it. And of course, you can see that we're really at a critical level right now, because it previously has acted as resistance. So it hasn't closed yet, and it's got another 2 hours to close, 2 hours and 10 minutes by my time. So, we could see it move down and then retrace. And if that were to happen, then we would see a price flip forming, and, you'd be selling the low, which is not what you want to do. But I hope that it does continue to go down, and mainly because we're still short on the pound Aussie. Now, they do fairly go, they're correlated fairly closely to each other. Of course, unless there's a movement on a particular pair to to the opposite direction. But for now, we're looking at just a few more pips really to hit target 2. For the pound Aussie, it's clearly in a downward move, and so there's no trade that I see on this, because we're already in this trade from up around here. It's been a good couple of hundred pips, so I think 265, I can't recall, but somewhere around there. And if it continues, then it could go even further. For my mind, I'm hoping that in this particular case it goes and breaks through and closes below 172.14, because of course we're in that trade. So on the daily, we're seeing a new possibility of a emerging day trade forming to the downside. Not incredibly strong at this stage, but once this if this price moves down below the 172.14, you will see the moving average dynamically change as the price pulls it down. So on the weekly, it's been downward, and very heavily so. So down on the 4-hour, down on the daily, well, on the daily swing, and very heavily on the weekly. And here we see that parabolic curve that I like to see when catching a swing. So, once again, if we see a move down to 72.14, then a possibility of further continuation to 166.45 or close to. So that could be a possibility of going short if you were wanting to get in on the action. For now, it's, it really has pretty much moved, so it'd be a bit too risky. And if we see this MACD change to green, then we could see, a bit more of a counter swing back upwards, or at the very least, some kind of consolidation. Okay, Euro Kiwi. This is interesting because we are seeing some early action on the Kiwi, even though the Kiwi is going down as the Aussie is, but that's more over the mid to long term, whereas over the short term, over the next few hours to the next day or two, the possibility could be that that they're going to the upside. In which case, the Euro Kiwi actually this for the session today could be one that's a possibility. We saw a recent price flip. It's still fairly close to the inception of the trend. In other words, the start of the trend, which was here, that moving average, followed by a price flip, and we're already 70 pips in the in the black. If you were to have taken that trade, we're seeing a swing down. If it closes at this point or below this point, it will be a valid swing down. And there's plenty of opportunity to move down. Let's just go to the daily. Daily, we've seen a rejection of this trend trade and the swing back down. And on the weekly, we're seeing, strongly to the, well, fairly strongly to the downside. So there's a lot of things that I like about this particular pair, and it's possibly one that we will be issuing. I'll see how it goes over the next couple of hours, and it may even be one that is issued today. And to it's a little bit late, but because we're now in strong profit on our other related pairs, then it could be an opportunity. You really would want to keep your lot size a lot smaller than what you used to on these pairs because they chew them up, and we've got about 130 pips to be to where you would roughly place your stop. There's obviously nothing guaranteed in life, and certainly not in trading, and certainly nothing safe about trading. Every time you take a trade, it's a risk. So it's just about risk management. As much as it is about anything else, no matter what strategy you use. So 130 pips for your stop, and the opportunity though is quite big. We're looking at 300, 320 pips. Say if we kept a stop there, obviously, as solid as these macro levels are, the most recent high was sorry, the most recent low was here. So be very, very aware as price if it got down to this point, as it approached this level. Because other traders would be looking at this low and buying off the low. So, trading is a continual war. And an email went out just this weekend about how it is to take no prisoners activity. There are big players in this game, and they're playing for keeps. Misdirection, manipulation of the markets, and those are the weapons of choice. So I would be very wary of this trade as it approached this low. If it continues, for now it's certainly short. So if we just go quickly to the daily, once again we're on a downward swing, and it's just come in just under the zero line. So that's all more indications towards giving more authority towards the swing continuing down. It is under pressure. Would like to see swing down at that level, but by the time that happens, it would have moved even further. The other way to do this, potentially, and I'm sure moving average traders would tend to agree, is you'd look at it more from a scalping position. You'd place your stop, a little bit above the fast moving average, so that would be 60 pips for your risk, and still a very, very big reward of 300 odd pips, give or take. And I guess the way that it would be played is what I say on every trade: lock in profits. So as soon as you're a few pips up, of course, when I say a few on the Euro Aussie, that's 40 pips. So it's not a big move as the eye sees it, and it's around 40 pips to this recent low, which acted as a correction point. For this correction, a support point for this correction before it went up. So that's where I would tend to look at it. Of course, the risk reward isn't quite there because you're risking 60 to, come to 40, but really at that point, I'm not looking at that as a target. I'm looking at that as a point of where to break even or move your stops from your 60 pip loss point to your entry point, hence break even. And then it's a free trade. If it continues to go down, put your party hat on and enjoy the ride. down, because if we do get a swing down, continuation of a swing down, this trade could continue to move, quite some distance and beyond. So the thing is, when you've got a good trade on your books, it's really different traders will say different things, of course, but some traders focus just on scalping. Some are just in and out. Some are just in it for the 20, 30 pips. Some are just there for that one-to-one risk reward. But personally, I like to ride a trade for as long as I possibly can, and particularly with the trend um, following strategies that we have, and also macro levels, which are typically, a few couple to a few hundred pips apart. So they're more positions that we're holding rather or more than just trades. So we could see some movement, and while we've been discussing this particular chart, it has continued to move a little bit down. So it'll be interesting to see what happens with that pair. Okay, pound Kiwi. If we haven't hit target 2 by now, then it's extremely close, and there's still plenty of room to move downward for this macro levels here. So that's been a great trade that we issued last week. Of course, would I get into it now? No. We've already had a bit of a warning shot here with a price flip for the price reversal system, and it does look like a little bit of oversold territory, so we could see a swing back upward. But for now, we're looking at short on the pound Kiwi. Again, on the daily, we really want to see a break of that 177.07. You can see that it was tested here, here, and of course here. So that is a really important point. And if we look at the weekly, once again, we would have to go back some way to see the price, go even lower than that. Okay, so it is one of those levels that is very, very important. Just bring that back to here. But for now, we issued a signal late last week, and it's gone extremely well for us. So for now, I wouldn't be looking at anything other than short. Pound Swiss, that is certainly not looking as strong, but certainly downward. If we look at the daily, just to give us a bit more of an idea, we've had a new downward trend trade, but the angle just isn't very, very strong like a few of these charts that we've seen today. So it's always important to be wary of that when you see that kind of pattern. Now, it has been strong to the weekly, so I certainly wouldn't be going long on it at the moment. If I were, then it would be a counter trend to this weekly direction that's been in place since late last year. So, for the time being, I'm going to say it as I see it, which is short. Um, we still see some recent lows back down here, but to get into it now, no, it's not something that would be interested in. Aussie CAD, this has certainly been going up, but it's very noisy. You can see it's just a lot of highs and lows, a lot of wicks in this chart. So it's something that I'm not even interested in looking at even closer. But for argument's sake, if we did on the daily, we're on an upward move, and on the weekly, we've seen a swing. Here's an example of a nice swing. So you get the nice curve here, nice gradual curve, a swing to the upside. But since then, not a lot has happened. So, last week we did see that swing. If we want to see continuation of this, I would personally like to see or price break and close above this 99.37 level. But it is a pair that I'm not too interested in, because it's of my personal opinion that the Aussie is still in decline, and of course the RBA, the Reserve Bank of Australia, is very keen to continue seeing their currency go down, because it's been causing issues. I mean, this is the case for all central banks all around the world. It's been a race to the bottom, so much so that we're seeing negative interest rates, unprecedented times that we're talking about. But I've given up thinking too much or caring about what's logical. in this game because quite often not much is. So it's just a matter of going with the flow, so to speak, and not reading too much into the fundamentals because, of course, um, the news feeds that we get and so forth are mediums of their weapons of misdirection and misguidance and manipulation of the market. So um, it's probably not a great idea to listen too closely to the talking heads on TV of what they think, because they're generally sponsored by institutions that want that intended result. Anyway, EuroCAD, again, we're seeing EuroCAD go down here, but the Aussie CAD was going up, and that's another reason why I'm not too crazy about the Aussie CAD to the long side. I'd be more interested in shorting it. So EuroCAD, we were seeing a big swing down from this upward move. It got close to the 148.92 macro level. Let's look at it on the weekly. We have seen a moving average crossover here, but we did see a real retracement last week. This is on the weekly time frame. So a price flip to the downside. So getting back to the 4 hour, you know, if it wasn't caught at the inception of the trend, which was here, it's actually not too far away from it, is it? It's only about 30 pips. Um, it's almost a trade that I would be interested in because the euro is getting a hammering as well, and we've got 90 pips down. But you know, the stop would have to be around 100 pips, unless you went for a scalp and placed your stop just above the fast moving average. We don't issue signals in that manner, but it's certainly something that could be looked at closely. And the pound CAD, well, this is more interesting to me because it's a similar pattern to the Euro CAD, but we have seen this move below this 171.92 macro level. So we're seeing a bit of consolidation. This is on the 4 hour time frame. So we're seeing 12, the last 12 hours, we've seen no real movement. I would like to see an upward move and then a price flip back down. Then it could be an opportunity. If we look at the daily, again, a swing to the downside. In the upward trend, but a swing to the downside, and MACD is now in negative territory, and the weekly heavily in a downward move. So you know, this one interests me. The other reason that it does is that this macro level down here, 167.24, was hit previously. Okay, back over here. All right, before it moved, we saw a nice big trend trade before a move back upward, and the risk reward is really really good. We're talking about even if you took it here on a punt, for lack of a better term, at around this level. The reason why it would interest me is the stop is as little as 40 pips. If you want to put a little bit more into it, then 50, maybe 60 pips. But the reward is big. It's 400, 420 pips thereabouts, before this macro level. Again, not necessarily for target one. You could play it that way, but I would like to see, or I personally like to see targets roughly midway between the two macro levels, and that would be all right. 460 around 230, which is right around here. Okay, so to be in harmony with these recent lows that saw this correction. If it breaks through this level, then we could see definitely a continuation of the move back towards the 167.24 for a nice move, and something that we may issue as a macro level early this week. Alrighty, that's it for the market analysis for September 19. I hope you enjoyed it. I've enjoyed doing these. I'm really excited about the webinars upcoming. Of course, if you don't want to go through all the analysis, as a premium member, you get the indicators, you get the alerts on your MetaTrader platform, you get push notifications on the Trend Catcher and Price Slip. indicators directly to your mobile device if you have MetaTrader Mobile installed, which is free, of course. And by all means, feel free to join us. We'd love to have you on board. We have the 12 months free special available for just a few more days. It's actually gone on a lot longer than we were meant to have it running, but people kept on asking us to continue it. But all good things must come to an end, and so we're finishing that over the next few days. This will be guaranteed the last month that we're having it. One, because it's been going on for too long. Two, because for a year at our rates, they're still extremely reasonable. And thirdly, because we are bringing out a brand new system sometime next month, mid to late next month, that I'm really excited about. Keep your eyes and ears out for that. It's not something that's going to suit everyone, but for the savvy traders amongst you and for those that want to have everything installed in their computer, it's a dream. It's undergone years of development and testing, and it was launched last year as an educational product for just under $1,000 per sale. However, we are going to be offering it to our members at a fraction of that price, and I mean an absolute fraction of that price. More details to follow. In the meantime, the best thing you can do is join up as a premium member, get all the indicators, get all those additional alerts, get access to our signals that we issue by email alerts and mobile notifications directly to your mobile device via our app, which we're extremely pleased with. We launched it earlier this year, and there's been thousands and thousands of downloads. It's really getting into the tens of thousands, or starting to now, and we're delighted with the results with that, and the medium that it's provided us for communication with our members. So thanks again for all your support, and till next time, good trading, live well, and I'll see you soon.